Good afternoon. Market news now. Asian markets mostly fell as investors remain concerned about inflation as well as likely policy tightening from central banks such as the U.S. Federal Reserve. Japan's Nikkei declined 0.9%. Chinese mainland shares lost momentum. Over in Europe, European stocks climbed with the FTSE up nearly 0.5%. The French CAC up 1.4% and the German DAX up 1.25%. Global markets are focused on the latest U.S. inflation data due out this week. The U.S. Consumer Price Index is set for release tomorrow, and the Producer Price Index is slated for Thursday. Investors will also be looking for any clues from Fed officials as to the timing of interest rate hikes too. Chairman Jerome Powell's confirmation hearing is taking place later today, and we'll give you an update on that when we analyze the markets tomorrow. However, given what's happening globally, to talk to us about how those dynamics are playing out into our local markets and also what to look forward to the rest of the week, we are joined by Makwe Maselela from Makwe Fund Managers. Makwe, thank you so much for your time. I mean, everybody talking about, pricing in how many rate hikes we should be expecting. JP Morgan, Citibank, Deutsche Bank, all expecting at least 4 hikes and the rate cycle to start off in March. How is our local markets dealing with all of these global developments and also this anticipation of the Fed chair later today?
Good afternoon to you and to the viewers. Yes, indeed, inflation continues to be an issue, and this whole issue about working out how much we expect or how many rates do we expect from the U.S. Locally, we are handling that fairly well. You see that we've managed to bounce back compared to yesterday's losses and also following what is happening with the European peers. And it's more a question of, I think to some extent we've factored in that come March this year, we should expect the first rate hike. But as we all know that the numbers that will be released tomorrow when it comes to the inflation will give us some guidance as well that really is it going to be 3 or 4? And we know that inflation, as we said, is an issue. I mean, look what happened to the European Union. Inflation on Friday continues to go up. The Japanese inflation today is also up. And we also know back home here that even though our inflation is within the target, but at 5.5 is still fairly up. So yes, that continues to be an issue. And I think that's continued to drive the markets, not just for this week, but for the whole of the year, that what do we expect when it comes to rate increases. And I think the problem is if they start to increase rapidly, then I think that is not going to be well for the markets. Markets will be rattled. But if they continue to increase at a steady pace, I think equity markets can handle that to some extent.
Let's shift a little bit and talk about the rand, because, while it may have been oversold towards probably late last year, it seems to be taking all of this in its stride. Is it a state of the calm before the storm, or how are you looking at the currency right now?
I think you are right. It was oversold at some point, but today is also benefiting from the fact that the U.S. dollar itself be ahead of the testimony coming from the U.S. Fed chair. The dollar has been weakening a little bit. We've seen the treasury yields as well taking a bit of a pause, so that is helping the likes of the commodity currencies. And this on a day when almost all commodity prices are up. Just look as well what is happening with iron ore prices, which at the same time is helping the local stock, which is Kumba Iron Ore, which is up almost 10%. So it's happening on a day when commodity prices are also being doing very well. And as I said, the rand itself is a commodity stock. But going forward, it will all depend on how rapidly they increase interest rates, and also more important when it comes to a local currency, that our own local reserve bank is not behind the curve going forward, because that interest rate differential between us and the developed economies will continue to drive our currency.
So, typically around about this time of the year, you have the big financial institutions sort of throwing in their expectations and forecasts. And at the end of the year, we try and see who was right and who was wrong. What do you think will be some of the main themes going into 2022, given the environment of rate hikes, especially for long-term investors? What are you expecting from that perspective?
I think we might get a bit of a surprise because everybody's trying to dump your tech stocks because we think when interest rates starts going up and given the high valuations thereof, they might not do well going forward. But I don't think that's going to be the big issue. The big issue here is going to be the economic recovery. If we see that the economic fundamentals are still in place, as we've just seen now with the with the new variant in Omicron, that it was not as severe as we expected, and we don't expect that to have a negative impact when it comes to global economic growth, and the likes of the banks should be doing well, given that when it comes to their interest earnings, they should be at least getting a little much better or more money because interest rates will be going up. So for now, I think focusing on the financials should be a good thing, but we have to be careful, and Nastasia, not to have a fixation on any particular stock, because say if it happens that we get a variant which shows to be resistant to be resistant to the current vaccines, then it's going to be a different story as well. But as things stand now, I think financials should be okay.
You mentioned, tech shares rather, and I can't help but ask you whether it's over for U.S. tech shares given this environment, or you just hang tight.
We're just hanging tight. We've seen what happened on Monday with them. They just dipped to almost 10%, whether you want to call that a correction. But immediately they managed to recover Monday and yesterday as well. So we think some of these expectations when it comes to interest rate hikes have been baked into those asset prices. And I think with them, when it comes to their margins, given that they're just so thin, might have a bit of an impact. But I don't expect interest rate increases to give us some form of correction when it comes to tech itself. Only when we have the economic fundamentals changing, then that's when we can start having a problem.
We've spoken about inflation and also interest rate increases. Is there a fundamental risk that you're seeing for 2022 that we may not have been focusing on?
Definitely, as I mentioned earlier, if it could happen that we get a variant which shows to be very resistant when it comes to the current vaccines, then that's going to be a problem. And also when we get to a point where people realize central banks that are behind the curves and start increasing interest rates rapidly, then that will be negative when it comes to equity markets. But other than that, then there'll be some other things which are popping up now lately, or since last week we've been dealing with that geopolitical tension, what is happening between the US and Russia when it comes to the likes of Ukraine. So stuff like that will keep on popping up. But I think as it is now, interest rates will be our focus for now.
All right, Makwe, thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers, giving us an idea of what to expect for the week and also summing up some of the key issues that are occupying the minds of investors.